I've always been told that my biggest flaw is that I'm overconfident. And as they say, I really thought I could beat Warren Buffett by a very high margin. But during COVID, if the markets were up 10%, I was probably up 70%, 80%, something like that.
And how is your asset allocation looking right now?
100% equity.
Aren't you afraid? Like we hear people say, right, diversify.
Diversification is quite yes. I borrow money to invest even further. Like a 7x return for the market was like a 20x return for me. I did this a lot. That was also the reason for a small decline in my portfolio later.
Tell me, what was this decline?
I had invested very heavily in Paytm.
How much did you lose?
I lost like 3 crores in 3 days. In my head, I was devastated because I was still thinking about those 15 crores that I would have potentially made. I really feel in the future, I'm going to thank the heavens that this happened.
Why?
I think
In today's episode, we have Yash Kumar, who lost 3 crore in his 3 days of trading, yet manages to achieve FIRE at the young age of 23. Learn about the financial mistakes that people do while trading, risk management, and the mindset you need to become a successful trader. Stay tuned to learn some of his smartest financial moves.
What is your net worth right now? If I may
about
ask.
2 crores.
About 2 crores. And when did you make your first crore?
It was at the age of 20, October 2021.
Okay, so you would have started investing maybe at the age of 19.
I
You were
started
just
in
graduate,
19.
or you were just getting into college, I believe.
It was actually during my board exams,
Huh.
a little before that. But
So, most of the people, when they want to start investing, the number one problem people have is the capital.
right.
Now, you at the age of 18 or 19, from where did you get the money? How much? How did you arrange?
We had a deal. I had a deal with my dad that if I get into good colleges, I'll probably get some amount to invest on his behalf, so on his account. So it won't really be on me. So that came to about 5 lakhs. And I got into pretty good colleges in the US. So it was UC Berkeley, University of Michigan. I had a few offers in the UK as well, like King's College London. That again would have come to about 1.5 crores net on net. And I had University of Nottingham. I pretty much chose the cheapest option, which was
Really?
University of Nottingham, because I really felt it was absolutely useless. I had another company back then. I really wanted to pursue that full time. My parents would have never allowed me to do that.
Okay, that's the only reason you even went to
College. My parents would have never just allowed me to drop out. And I was
Okay.
like, instead, see, you're saving about 80 lakhs by not sending me to King's, probably a crore or 1.5 crores by me not choosing to go to the US. And he really wanted me to go to the US for that matter. But I was like, let's have a deal. Just give me half of that, half of what I'm saving by not going to King's. So 40, you have the complete control over the money. I won't touch it in any other thing. I would just be investing in stocks.
But at 19, how did you know what to do?
So I got into trading initially, right? Like almost every other person. And funnily enough, my initial strategy was very funny. So Jet Airways was going bankrupt at that point in time. I was shorting Jet Airways stocks on a daily basis whenever it was hitting a certain level.
Okay.
And I was making about 5,000 rupees every day by doing that, whenever I was doing it. And this went on for about 10, 15, 20 days. So accumulated about 50, 60, 70,000 rupees. And then obviously right after that, I lost all of it on a single trade again. Yes Bank, lost 2 lakh rupees. Totally devastated. But then eventually I started researching as to what were the companies that a lot of the mutual funds had bought. I made a list of the top 10 mutual funds. I saw what were the top 5 holdings of each of these mutual funds. I made a list of that. I put my money just there. Absolutely no reason except that the fact that mutual funds had bought that. Right? There was no reason beyond that. But eventually that capital recovered. What I'd lost with Yes Bank.
Nice. Huh.
So
You did this a lot.
I did this a lot. That was also the reason for a small decline in my portfolio later. But this is what I did a lot.
Tell me, what was this decline? Because I think we spoke about the good stuff.
Right.
I now want to know what was this bad time that you had.
So that 40 lakh at one point in time had increased to over 5 crores by 2023. I had invested very heavily in Paytm. And I'd bought the stock around 500 rupees, which in my mind made a lot of sense because based on my analysis, the company was on the verge of profitability. And in my opinion, this profitability was going to come in quarter 4 FY24.
Okay.
So March 2024, right?
Okay.
The results would have come out in April.
Huh.
So April 2024, Paytm, in my opinion, would have declared profitability. And based on my analysis, the stock price would have hovered between 1,200 rupees to 1,500 rupees. So my 5 crores would have basically become 15 crores.
Yeah.
But what happened in February is that the RBI move came along to
Yeah.
restrict Paytm Payments Bank. And as a result of that, the stock fell a lot.
How much did you lose?
I lost like 3 crores in 3 days. And because the stock was hitting a lower circuit, there was no way for me to really sell and move out. But yeah, I think it was a part of the game. And I really feel in the future, I'm going to thank, I don't know, like the heavens that this happened.
Why?
I think,
I was going to get there. Like
right.
losing 3 crores in 3 days for a 23-year-old.
Right. I was 22 back then.
It's a lot. Like even
Right.
today, if I lose even 50,000 anyway, I would.
Right, no doubt about that.
I would not sleep. So what was your mindset back then? And now you're saying you would thank the heavens. So
I was initially, when it happened, I was devastated. But the reason why I say I'm really thankful today that happened is because it really helped me correct some of the mistakes that I was making previously. One, because times were going good, 2023 was a crazy year for me. So I started off the year with a portfolio low of about 1 crore. By the end of that year, closer to October, I was at 5 crores. So I mean, I was like, this is how it's going to be from here on. And I was spending money just like that as well. Knowing that, I mean, this is just going to hit 15. I'll probably be, I don't even know, like a billionaire.
Did greed take over by any chance?
Greed took over. More so than greed, it was the problems with my behavioral aspects. When it came to investing, I totally forgot about risk management and I went a little too gung-ho and all of that. And it was all driven by a short-term output of that. And sort of in investing, Warren Buffett says this a lot. More important than your brain is your gut. You have to manage your psychology better.
Yeah.
And that's where probably it went a little off. But post that, I mean, once again, I got into the same analysis, looking at stocks properly, researching, and then it helped me correct that trajectory. So if I would have... Okay, so here's a funny story. There was this guy called Bill Wang. Bill Wang increased his capital from $200 million to $10 billion in a matter of 8 years. So, and Bill Wang was on the path of becoming the richest person in the world.
Okay.
You know what happened after that? He over-leveraged.
Okay.
His net position size was about 30...
Over-leveraged as in took a lot
of debt. His net position size was over $35 billion.
Okay.
And when the stocks fell, he lost $20 billion in 2 days. Bill Wang lost $20 billion in 2 days. His net worth was $10 billion at that point in time.
Oh.
And now he's in jail for financial fraud. But that's how crazy it was. And it was all his personal capital. I really feel that if the Paytm thing wouldn't have happened today, it would have happened in a much worse way in the future. So I just think it was a small learning price that I had to pay.
And how is your asset allocation looking like now?
100% equity. Probably a little more than 100% because there's also some debt. But I would honestly have it no other way. Not today, maybe not much later.
Aren't you afraid? Like we hear people say, right, diversify. Don't put all your eggs in one basket.
Funnily enough, in terms of diversification, I feel that... So Warren Buffett said this again, right? I'm a fan of Warren Buffett. I probably have seen quoting Warren Buffett a lot. There's this book actually called Snowball. It's a pretty thick book, 600 pages or so. I've read it 5 times. Absolutely love it. He says that diversification is for idiots. Right? And I mean diversification both in terms of putting your money into a whole range of stocks and putting it into probably various asset classes. So he probably says that you cannot ever know enough about more than 4 to 5 businesses. So putting your stocks into 15 businesses instead of 4 to 5 businesses is probably stupid. Right? So that's how he has invested primarily in the past. That's how I invest. I've never probably held more than 90 to 95% of my value in more than 4 to 5 stocks.
Okay. So you're saying 100% in equity, but that's high risk, right? So what about your emergency?
So, okay, the biggest question over here is, how do you define risk? So the problem with people in the stock markets is that they are defining risk as volatility.
Correct. Yeah.
Whereas risk, if you really think about stocks, is the risk in the business of the company that you're talking about, the business in question. So in the short term, it comes down to what participants of the market think about it, right? But in the long term, the only thing which is going to determine the price for stock is going to be the earnings trajectory of the company, how much money that company really makes. So in the long term, that's the only thing that's going to matter.
How would I know what are the materials that I can use to get this information?
So, I mean, you can look at the annual reports of the companies. You can look at a lot of investor call transcripts.
And this is freely available.
It's all freely available. Investor call transcripts give you a very good idea as to what's really happening with the business of that company from a very short-term perspective, whereas annual report would give you a rather long-term picture of the same company.
But would you recommend this kind of strategy to somebody who has a 9 to 5, for example, or who's not entirely interested to research about the stock market and be behind it every day?
I think stock picking is not really for somebody who cannot really put at least a few hours into it every day. Like Warren Buffett, for that matter, again, spends 6 to 7 hours reading, and he has been doing that for the last 80 years now.
Yeah.
So that's pretty much how you're like how you'd probably want to go ahead with it. And I'm obsessed with it. That's all. Like, if I could just sit somewhere good and just look at stocks, just look at how companies are performing, just look at the economy, I could do that like 10 hours a day, 12 hours a day, and I would not even be interested in going out or anything of that sort. So, like, if you don't really enjoy it that much, you shouldn't really get into stock picking. You're much better off putting your money, say, with an investment fund, or for that matter, a mutual fund or an index fund. Or index funds don't really exist that much in India, so an ETF or something like that, a low cost fund that manages your money well.
Yeah.
That's a much better solution.
Any books for beginners that you would recommend that you have read and has helped you in your journey?
Right. So I think Market Cycles would probably be the most incredible book. Market Cycles by Howard Marks. I think Market Cycles was the reason why most of my profitable trades have really happened, because I could understand market cycles better as a result of that book. Other than that, One Up on Wall Street will really give you confidence that you can literally beat Wall Street at their own game. And fan of Warren Buffett, for that matter. I've read most of his annual letters starting 1965. Watched almost every single one of his YouTube videos, whichever is available in public, and a lot of his AGMs. 1999 Berkshire AGM. He was asked a question along the lines of an article which he wrote at one point in time as to how much he would be able to make with $1 million, right? And Warren Buffett says that making 50% per annum is not really that difficult when you're managing a very small amount of capital. All through his 20s, he was making over 50% non-leveraged returns. So without using any leverage of any sorts, he was making 50%. And by then, because of COVID, I was already making returns of a little more than that. And obviously that gave me a lot of confidence. And for that matter, even as a kid, I've always been told that my biggest flaw is that I'm overconfident. Right. And well, as they say, I really thought I could beat Warren Buffett by a very high margin. So I really felt that amount will grow very fast. After reading a few of those books, early 2020s, all through 2020s and 2021.
You got into this by reading books, internet resources.
Right.
And doing it yourself, like getting
Pretty
your hands
much.
dirty.
Absolutely.
Right? And in your first year of trying this out, you were able to make more than $1 crore.
A little more than 1 year, but yes, in profits.
So for people who are watching us right now, do you have any tips or advice for them that will make them multiply their money?
Well, I think one of them would be that don't, again, get into stock picking unless you really are interested in it. The second one would be that, again, Buffett's advice. It's a lot more about the gut than about the brain, right? So it's so much more important for you to manage your psychological things well, not to be driven too much by greed, not to be driven too much by fear, right? Funnily enough, I've always observed that when people think that the markets are going to forever, like, rise even further from these levels after a crazy rally, that's when it tends to fall. And when people really think that this is constantly going low, let's just sell and get out, that's around the time when there's a reversal in play. And I've seen this happen with me as well, right? Managing your emotions is extremely important. And third, and the most important, don't ever try timing the market. I mean, time in the market is substantially more important than timing the market, right? Even if you start with a rather small amount of money and you just compound it slowly with time.
Yeah.
So you're going to make an insane amount of money. And from that perspective, you're very lucky to be in India. Because India is one of the fastest growing economies, no doubt about that. And what happens when you're in the fastest growing economy? You're probably going to have the fastest amount of growth rates, both in terms of profitability, in terms of growth of businesses, and so forth. So you have a massive investment opportunity from that perspective.
Yash, thank you so much.
Thank you so much for having me.
I'm sure people who are watching it have definitely taken inspiration from you, and they would have had a lot to learn. So thank you so much for taking our time and coming here. Guys, thank you so much for watching the video. If you liked it, please like, share, and subscribe. I'm also going to mention a link in the description box. If you are interested to feature in our next episode, please fill the form and I'll see you in the next one.